Today's Talk About It Tuesday question is, I saw a video that suggested if you're going to be a real estate investor, that you should create an LLC first and use that to buy properties. What are your thoughts on this? Why would that be better than purchasing in your own name? Okay, so I hear this question a lot, and every new real estate investor who watches online videos hears that message repeated. And I think the message is being repeated by people who were never real estate investors. So there is a place for an LLC in real estate investing. I think the order that people are suggesting it is off, and I'll tell you why. So an LLC, limited liability company, is a business structure. It's a business entity. And the advantages later on is that if you transfer the deed to an LLC, then it offers liability protection against you being personally liable if a tenant sues, or I don't know, whatever, situation, somebody falling on the sidewalk in front of your place, whatever the situation is, it protects you from being sued personally, and they could only go after the LLC. So as a liability protection tool, it is a great tool. As a business structure, it is a great structure because it forces you to operate the real estate like a business, and it gives you flexibility in terms of having other partners and sharing the profits and the liability, right? Sharing, or not, shouldn't say the liability, but sharing the expenses and the profits. So it's a good business structure. It's a good liability protection tool. It is not a good tool for most new investors to be able to buy a property. And let me tell you why. Most traditional lending institutions, most banks, and when you talk about FHA, VA, they are geared towards individual borrowers. They are not geared towards commercial borrowers. So most of them will not even entertain an LLC that is trying to borrow money. The others that are willing to entertain require more qualifications for the LLC than they do for an individual. So not only will you have to show cash reserves, not only will you have to show credit worthiness, just like an individual, usually you have to pay a higher down payment as a corporate entity, and usually you will get a higher interest rate on the loan. Usually you'll get shorter terms on the loan. So if you qualify as an individual, it is easier, probably smarter, to buy it as an individual, transfer the deed to the LLC to remove the liability, aspect of it, and again to operate it as a business and get all the business deductions that are available. But then you're saying, but you still have the note. No, because once the property is showing positive cash flow from rental income, you can do what you call a DSCR loan, right? So you can refinance into the DSCR loan under the LLC. And that isn't based on credit worthiness. That is based solely on the rental income coming in, that you show on paper and through records that you can cover the cost of servicing the loan, and you have some extra. So easier transition, probably smarter transition, not to do the LLC first. And the LLC can be created in a day, within an hour if you expedite. So there's no rush to do the LLC ahead of time, right? So whoever's on that physical contract is the only one who will qualify for a loan. So if you sign the contract, then the LLC is meaningless. But if you put the LLC on there, you limit the amount of funding you can get. Can you get a hard money loan with the LLC? Absolutely. For those who don't know what a hard money is, that's private money. These are private lenders, and some of them require you to have an LLC to do it. However, extremely high down payment, usually maybe 35% down. Extremely high interest, usually between 10 and 15%. Usually interest only for a year, and at the end of the year, the entire amount, the entire cost of the property, the entire amount they lent you is due in 1 year. So is it a situation where you always should not use an LLC? No, there are some cases when, if you know you can get hard money loan and you know you can either flip it or refinance it into a DSCR loan within a year, then perhaps you can do it as an LLC. But in most cases, it doesn't make sense to try to do it that way, especially if you know on paper you look good, right? So you can buy it as an individual, transfer to an LLC, refinance into the LLC to remove the note from you as well. So, people put it out there as if everything is 100%. This is the way you should do it every time, and there's nuance, right? And so you have to look at the best situation for you. If you look great on paper, or if you have partners in the LLC, it might work out. If the LLC has done business before and now has creditworthiness, now has credibility in the case of hard money, and if it has capital and resources, then sure, then LLC is fine. But as a new investor, and that was the question, as a new investor, it is 100% not the first thing that you need to do, create an LLC. So I'd love to hear your thoughts on it, but please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.